Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading here, and I have a good video for you guys today. A trade I just took in the futures market because it is not yet 7 a.m. So before 7 a.m., I will sometimes look to trade the futures. And if I notice a pattern forming, I'll jump into the trade. And today's video is going to show you guys a liquidity trap. This is where the big money, the big market makers, the people trading these futures contracts before 7 a.m. Eastern Standard Time, it's where they like to bring price to get all of those stop orders out for a big move, either up or down. And you know it's a liquidity trap when it's just below a very obvious level. And I'm going to get into showing you guys here when I share the trade with you. Now, this is where I'm going to ask you guys if you take the 2 seconds to hit that thumbs up for me. You know it helps the channel grow, all that kind of stuff. And I do appreciate it. It takes a second. Thank you so much. Okay, now, sharing the trade. This is from 3 a.m. to right now. At 3 a.m., that is when the futures start to get their heavy volume. Now, they start to get their heavy volume from the European Open. So everyone over in the UK, Asia, well, Asia session's already over, but everybody in the UK, their stock market opens over here. So at this time of the morning, Eastern Standard Time, New York time, whatever you want to call it, that's when you see a lot of volume pour in for our futures. And that's what it really gives you a look on the thinking overseas, where their market is going. A lot of times when they buy up our futures, that means that their market is having a good day as well. And that's why you see a lot of volume here. So anyway, coming into the morning, I wake up around here. I open up my platform. I get into Discord. I let them know all important stuff and the levels on the S&P and the Qs. You guys know how I do it over there if you belong to our Discord. If you don't, get in there. It's free. It's a great group. So anyway, this is what I noticed. Right here, this candlestick right here, I noticed there was a trend developing. Higher highs, higher lows. So I took out my tool right here, and you could find that under drawings. You go into here, trend line. And this is what we do, by the way. You know, when you trade, any traders, if you use technical analysis, it helps day trading so much. I do not recommend trading until you know how to do technical analysis. So this is also going to be a little lesson in technical. So I drew out a trend line. We were touching right here, and I'll just do this for you. We were touching here, here. So you see this price comes down to this level here. It's an ascending trend line, which means that the move currently going on is very strong. We're over VWAP. Anything over VWAP signals a lot of strength. So right here is where I drew my trend line. Before this happened, as you can see, I took my trade before I knew it was going to hit here. But I had my trend line already there. So what do? I took my trade here when it was going over the 9. I thought that this bounce was going to produce this move. And that's exactly the point of this video. What happened right here is called your liquidity trap. That's the big guys getting in on this big candle right here. Right here, this white candle. That means that in this 1 minute period, you had the price go down and up and close at exactly where it opened on this candle. So you see them take up everybody's stop loss. So if you want to buy a whole bunch of product, you need people selling it to you. The only way for the big money to get enough contracts for this move is to have a lot of sellers. Now, why would people be selling here at the trend line? I would be buying at the trend line. They're not. So they set their stop just below this previous low right here. So they know, because you can see all the orders stacked up here, 1K, 2K, 1K. They know that there's a lot of stop orders set. So what do? That's where they can buy them all, because these are people that went long here that have their stop set just below this previous candle. So if you go long, you bought. You have to set a stop, and that's your sell. So there's a lot of sell orders right here for the big money to buy. If that doesn't make sense, it might if you just replay this a little bit in your mind. If somebody wanted enough contracts here to go long, they need people to sell it to them. It's supply and demand. The only way they're going to get enough contracts for this move is if enough people stop out. So if you stop out, you're selling back your, at a loss, you're selling back your contracts that you bought, wherever you bought. Maybe you bought here, but you set a stop just below where the previous low is. That's usually how you would set a stop. Now, what I did, because I've seen this happen before, I set my stop a little bit further at 4337. So instead of getting stopped out, 1/4 of a point is all it took. Instead of getting stopped out, I just missed their bottom tick, which is what they were looking for. They grabbed up as much contracts as possible that they wanted in their lot size, and then they moved up. I set it just below that level because I've seen this happen. So if you guys, the moral of this story is, if you guys ever see very clear things like this, so you have a trend line, okay? Instead of setting your stop right on the trend line, give yourself a little room in case there's a liquidity trap like this. Also right here, if this is the previous low at 37.25, don't set it at 37.25. You guys can tell this is the same level. Set it below this level. And that is how you can avoid getting trapped like this. So anyway, this video had technical analysis, liquidity traps, supply and demand, a decent trade. So I would hit the thumbs up for the video if I was you. And if you want to learn more about trading, take a look at my other videos that I have out. They're great. There's a lot of good content in there. And also my trade recaps. trades that I took, you can watch these over and over and you can see why we get in and why we get out, where and why. And that's the basis of learning day trading. You want to know entries and exits and what's going through somebody's mind. And anyway, that's the way that I learn the most, is watching day trading recaps. You can really pick up a lot if you just study, you watch it, and you learn technical analysis. So, guys, that's going to be it for me. Like I told our Discord, I'm golfing in about 45 minutes from now. I have a tea time, so I'm not going to be able to trade for the rest of the day. So I hope everybody has an awesome day trading, and I will see you guys back with the next video. Take care, everyone.